Ladies and gentlemen, I would like to welcome you very warmly to our webinar today. We'll wait for a few minutes before we kick it off so everybody has the chance to enter into the room. Very well, I think we can kick it off. There are still some people joining, but I think most will be all right already here. Let me introduce myself first briefly. My name is Christian Rakosch. I'm chairing the World Bioenergy Association. Our association is dedicated to promoting and supporting the sustainable use of bioenergy at a global level. We are a membership organization. We are open for new members, so please feel free to join. And our main objective as an association is, I think, to enhance understanding and learning. Bioenergy is something that is complex, that is full of misunderstandings, because traditional bioenergy is often not sustainable, whereas modern bioenergy can be sustainable. So learning is a big topic, and these webinars are a good opportunity to make expert knowledge available to a wide audience across the globe. I think we had participants from over 100 different countries in our webinars. Our webinars are all being recorded and they are available on our website, so you can also look back and see the topics that we've been dealing with in the past, and also the slide decks that will be shown will be made available. Now, for today's webinar, it is on a topic that is quite relevant, but probably not so much on your radar screen. It is the topic of greenhouse gas calculation, and more specifically about greenhouse gas calculation related to land use. The Greenhouse Gas Protocol has recently published a standard on how greenhouse gas emissions from land use should be calculated. And to be quite frank, we're concerned that this standard might not support greenhouse gas mitigation, but even undermine it or even jeopardize it. And this is why we have invited you to this webinar, and we have also invited speakers that are deep experts in the subject. Two of the speakers, Annette Cowie and Michael Goldsworthy, have themselves been part of the development of the land sector and removal standard. Tristan Brown is from the molecule group that is also very active in addressing issues that are related to using sustainable molecules from organic matter from plants. So, having said that, I would like to give the floor to our first speaker, Annette Cowie. She is talking to us from Australia. Annette, you will give us an overview on what this complicated greenhouse gas calculation is about. So the floor is yours, and please be so kind and also introduce yourself briefly.
Thank you very much, Christian. I hope this is coming. I've pressed the right button, I hope. And my slides should come up in a moment. And while that's just happening, they're there. Wonderful. Okay, so thank you for the opportunity to talk to you today. As Christian explained, I'm going to provide an introduction. I am from Australia. I am an adjunct professor in the School of Environmental and Rural Science at the University of New England, which is in northern New South Wales. I have a background in agricultural science and about 25 years experience in greenhouse gas accounting for the land sector, including for bioenergy and biochar. I've been affiliated with IEA Bioenergy for about 25 years, and I've been involved in development of standards for greenhouse gas accounting in the ISO space, carbon footprint standard, the carbon neutrality, and now working on the net zero standard. And I'm an author on several IPCC reports. And in relation to this Greenhouse Gas Protocol Land Sector and Removal Standard, I was a member of the Technical Working Group and then the Advisory Committee. And so my role here today is to give an introduction to describe the context for this standard, the general greenhouse gas accounting landscape and the various applications for greenhouse gas accounting in the land sector. And I'll describe briefly the key features of each of these and then explain where the Greenhouse Gas Protocol's Land Sector and Removal Standard fits. And the subsequent speakers will fill in with a lot more detail about the standard and provide a critique of it. So I'm going to use this diagram, which I found recently on LinkedIn, which is a really nice and neat summary of the different applications for greenhouse gas accounting. It describes it in 4 layers in this type of pyramid and talks about the 4 different purposes for which you might do greenhouse gas accounting. That's the full figure, and you can find it on LinkedIn, and it neatly summarizes all the details that I'm going to go through now. So starting first with the country level greenhouse gas accounting. What I'm talking about here is the reports that countries produce each year, their national greenhouse gas inventories that they submit to the UN Convention on Climate Change and under the Paris Agreement to demonstrate their whole territorial annual emissions and removals. So the boundary is what happens within their own country, and the quantification, the accounting that they undertake, is described by the IPCC, the Intergovernmental Panel on Climate Change. The IPCC is a panel that was put together by the UNEP program and the World Meteorological Organization way back in 1988. And it has 195 member countries, so the panel is comprised of government delegates from those countries. And the guidance on developing the national greenhouse gas inventories is put together under the support of the Task Force on National Greenhouse Gas Inventories. And each of the reports that they develop is put together by thousands of scientists from all over the world who contribute on a voluntary basis as the authors and reviewers. And IPCC reports are all subject to a really rigorous review process involving sequential drafts that are reviewed by panels of experts and government representatives, and then there's a final approval process by the IPCC panel members. So it does take a while, but they're very rigorous reports, and they tend to underpin the greenhouse gas accounting in all the other spheres as well. So moving to the next level up, this is the company level quantification, and this is the one that's particularly relevant today. So this is similar to country level reporting in that it's an inventory of annual emissions and removals, but rather than a territorial basis, the boundary here is the financial or operational control of the company. And to add an extra complicated dimension, it also includes the life cycle emissions from the products produced or sold in the year of reporting. And this is where the language of scopes comes in. So this language of scopes was introduced by the Greenhouse Gas Protocol. When they say scope 1, they're talking about the direct emissions associated with the activities of the company. The indirect emissions are those that are resulting from the generation of electricity, usually, that's imported by the company. And then scope 3 emissions are the upstream and downstream supply chain emissions associated with the activities of the company. The guidance there is the Greenhouse Gas Protocol, as I've mentioned, but there's also an equivalent ISO standard, 14064 Part 1, that provides requirements for companies to undertake their inventories. Then the next level up is the product level quantification. So here it's a completely different boundary. We're talking about the carbon footprint of a product across its life cycle from cradle to grave. So the standards that are relied on here tend to be based on the ISO life cycle assessment standards. The LCA standards 14040 and 44 provide guidance for people undertaking assessments that cover all the different aspects of environmental impacts of a product. And then there's 14067, which is specific to the carbon footprint of a product. There is also an equivalent Greenhouse Gas Protocol standard at that level. It's not as prominently applied. And then finally, at the very top of the pyramid is the project level greenhouse gas quantification. And here, what we're talking about is usually the application is to generate credits for emissions trading. So the quantification is the emissions associated with your project activity in comparison with a reference activity, the baseline, what would have happened without your project. So it's highly critical that you apply the integrity criteria here. What you need to make sure is that credits that are generated are for activities that wouldn't have happened otherwise, and that if it's about sequestration, that there's measures to manage the risk of reversal, usually known as permanence measures, and that the quantification is also verified by an external third party to ensure that it's a valid calculation of credits and issuing of credits, because in this case, the credits are often used as offsets to counterbalance the impacts of somebody else's emissions. So we do need to make sure in this case that you're probably erring on the side of conservatism, whereas at the inventory level, we're really trying to be as accurate as possible. Here there are a wide range of standards. There's an ISO standard at the project level, 14064 Part 2. There's a Greenhouse Gas Protocol standard, but there's also a raft of standards that have been developed in the voluntary carbon market, standards for individual project type activities, and then there's also the Paris Agreement Article 6.4, which is relevant at the project level. So just coming back to this diagram, if you want a reminder on all those different layers and the particularities of each of them, then I would recommend this figure, which summarises it very neatly. And just honing in now on the organisation level, which is the main topic of today. This is where the Greenhouse Gas Protocol's land sector and removal standard fits. And I just want to describe why it is really important. You may have heard of the Task Force on Climate-Related Financial Disclosure. This was established back in 2015 by the G20 to assist companies that wanted to be able to make climate-related financial disclosures, and they wanted a standard approach for doing that. This task force completed its work in 2023, having produced some guidance, and then that was taken over, the role was taken over by the International Sustainability Standards Board, the ISSB, and they've produced what's known as IFRS S2 Sustainability Disclosure Standard. And that document at the international level requires that quantification is undertaken using the Greenhouse Gas Protocol standards. Now, the reason why this is really important is because countries around the world now are implementing requirements for companies in their jurisdictions to undertake disclosure, often according to the IFRS S2. What we've seen is some variation on how different jurisdictions have applied it. So in Europe, under the CRSD, there's actually some flexibility. So it allows either the Greenhouse Gas Protocol or the equivalent ISO standard. The equivalent process in the US, which hasn't been progressed under the current administration, but it was even more flexible. It allowed either of those standards, but also any other standard that was applicable to the circumstances of the company. But in Australia, where I'm from, the legislation has implemented the IFRS S2 word for word. And so in Australia, the only option for companies is to use the Greenhouse Gas Protocol standard, almost. There is one way out. And so this is just a high-level overview of of how it works for our agriculture and forestry industries, at least in Australia. And because we're following the IFRS S2 in our relevant legislation, where our companies are required to use the Greenhouse Gas Protocol, except that the IFRS S2 does have this option of a way out if there is a jurisdictional requirement to use an alternative method. Now, that does happen to apply to other companies in Australia, but not for the land sector companies. So our agriculture and forestry industries are definitely going to be required to use the Greenhouse Gas Protocol. Now, until the Land Sector Removal Standard was published, we had the suite of corporate standards, the corporate standard for Scope 1 and Scope 3 reporting, and these were quite high level, quite generic and not particular to the land sector at all. So they didn't provide much in the way of recipes for how to undertake accounting at the land sector level. And what's more, the Scope 3 reporting didn't allow inclusion of carbon sequestration. So we were all very keen in the land sector to have the Land Sector Removal Standard produced so that we would have more specific guidance on how to do it and have more consistency and have the option of including removals associated with carbon sequestration activities through management of vegetation and soil. So after a great deal of effort, the document was finally published. It was a protracted process. It was commenced in 2020 with the establishment of technical working groups. These worked for a couple of years to produce a draft, which then went for external review and pilot testing. And initially they planned to publish it in 2023, but some issues came up, and I think Mike will talk a bit more about what those issues were, but they extended the deadline several times and finally published it at the end of January this year. They published a standard, and they've said that there will be an accompanying guidance document which will be published in the second quarter of this year. So we're all busting to see that to see some more detail of actually how to do it. They've said that there were over 100 experts involved in developing the standard and over 1,000 people involved in reviewing it. So as the name suggests, it covers the land sector for emissions and removals, and it covers removals also from the technological removals. So here we're talking about things like direct air carbon capture and storage, bioenergy with carbon capture and storage. It was published in January, but it takes effect from the 1st of January 2027. And it says at the beginning that if you have significant land sector emissions, doesn't actually define significant, but if your company has significant land sector emissions then you must use this land sector removal standard. So our companies in Australia will definitely be required to use this. Now, Volume 1 excludes forestry due to the lack of agreement on the approach to take to quantify removals associated with forestry, which I think Mike will talk about more. As I mentioned, there will be a guidance document to be released shortly, which should provide more detail and clarify some of the maybe more ambiguous aspects. I just wanted to finish off by saying there is an extra twist here. I've mentioned the ISO standards and the Greenhouse Gas Protocol standards as two separate things, but in fact ISO and GHGP have recently announced a collaboration, and they've commenced revision of their standards at the organisation level, company level, at the product level and at the project level. And those three groups of standards, the intention is that the GHGP and ISO will work together, and they'll produce single standards that are double badged by both organisations. So the process is only just starting. We're not sure exactly what it's going to look like or what it's going to produce. It will be a couple of years before it produces the documents that will go for vote to the ISO members. But that's the plan at the moment, that they will in fact bring these documents together. So that might indicate a little further why we're a little concerned to make sure that the land sector removal standard does serve our industry as well. So that's all from me. But I would encourage you to essentially watch this space. The Greenhouse Gas Protocol will put out a request for information on forest carbon accounting. I've mentioned that the ISO and GHGP are working together. There are opportunities to have input to that work through your mirror committees from your standards bodies in your countries, and also watch out for what your country is doing with respect to its climate-related financial disclosure legislation. Thank you, Christian.
Thank you so much, Annette. That was, I think, very helpful for all participants that have not been deep diving into the complexities of carbon accounting, and this has been basically setting the scene. I noticed that the only guys that are kind of showing up in the chat are the AI assistants. So if you have a question also regarding the presentation of Annette, please do so through the chat, and we will give Annette the chance to answer it after the next presentation, because right now there are no questions right now. So with that being said, I would like to ask Mike Goldsworthy to continue. Please, Mike, introduce yourself briefly and explain to us a little bit on how you perceive the process of developing the GHGP, the land use and removal standard, and what you see as issues that are problematic.
More than happy to, and thank you, Christian. It's a pleasure to be here. It's the development of this standard has taken up a lot of my time over the last 6 years, so it's good to be able to sort of discuss some of the issues with you all today. Let me just get up my slides. So hopefully
they're here.
Perfect.
Just put them in presentation mode.
Yeah. Hopefully. Sorry, it's taking a minute. There we are. Okay, are we all good?
All good.
Perfect. Yeah. So, good morning, good afternoon, good evening to all of you. Thanks for jumping on this webinar. So, I'm Mike Goldsworthy. I have been involved in corporate greenhouse gas accounting for close to 15 years now. I've been with the DRAX group for coming up 8 years, working on a wide range of different greenhouse gas topics, and that's included product carbon footprinting for the wood pellet that we source for our bioenergy plant over here in Selby in the UK. I've worked on the corporate side of reporting, so disclosure in accordance with the Greenhouse Gas Protocol, and for the last 3 or 4 years, I've been working quite closely on carbon markets, so more the project accounting side of things, in particular focused on carbon removals through biomass, carbon capture and storage. But I've been involved, like I said, in the Greenhouse Gas Protocol land sector and removals guidance for the 6 years in development. We were part of the technical working group, review group and pilot group, so I've sort of stayed close to the process throughout, and going to give a bit of insight today on both how the process was run, some of the challenges it came into, and then some of the technical issues that have sort of materialized coming out the other end on that with the final guidance. So just to briefly pick up where Annette left off, as Annette showed in the development timelines, it's taken over 6 years to develop, despite the initial timelines of 3 years, and a lot of that has been down to sort of many sort of contentious issues that have materialized throughout the process. I think going into the process, I think there was an expectation that the guidance would lean heavily on IPCC convention, IPCC methodologies that have been developed for country level reporting, and this set of guidance would look to take those methodologies and implement them in a way that was fitting for companies. But I think very early on in the process, it became quite apparent that the Secretariat was intent on not necessarily changing convention, but not necessarily taking that the IPCC methodologies as the basis for setting the guidance, and they wanted to come at this, I guess, from almost sort of first principles. And so every single potential issues associated with sort of land sector reporting was kind of unpicked and approached from scratch. So the Secretariat, there's a co-secretariat for this process. So the World Business Council for Sustainable Development was involved, but the main driving force is the World Resources Institute. So they sort of held the pen on the work and coordinated the process. There was a technical working group. There was actually initially 3 technical working groups, one on bioenergy focus, one on land sector reporting, and one on carbon removals. It was quickly realized that actually there were so many cross-cutting issues that the structures changed to form one single technical working group after maybe a few months of development. There were subsequent phases of piloting and reviewing of the guidance following publishing of the draft guidance, and I think for the last 4 years there's been a lot of work behind the scenes in trying to come towards the final guidance. Now, the early part of the development was very sort of open and transparent in the way the work was being developed and the way that decisions were being made and communicated. I think one of the challenges we've seen since publication of the draft guidance and the early stage of trying to resolve some of these contentious issues is that there's been a lack of transparency there. So there was disbanding of the technical working group, and the Secretariat looked to try to solve some of these issues behind closed doors with the independent standards boards. There's been regular changes in governance throughout in terms of the different bodies and the different groups that are there to develop the content and to make decisions. And consequently, it's led to opaque decision making and ultimately to this end draft guidance, which, while it has many areas that are reasonable and good, it has some real critical issues in there that could be incredibly problematic for bioenergy, but also the broader emerging areas of the bioeconomy, whether it's bioplastics or biorenewable chemicals. And I won't go into every single one of these. I'll maybe just touch on maybe 3 of the most critical areas. The first, which Annette briefly touched upon, is the issue around forest carbon accounting, which actually didn't come to a resolution despite the multiple attempts to try and come to some form of agreement. And it finished, the end of this process kind of finished up with 2 proposals being taken forward for consideration. And the main issue around this was the need to try to identify anthropogenic impact on forests. So there's general agreement that your land sector inventory should isolate anthropogenic impact from non-anthropogenic impacts, but there was a kind of disagreement on how those should be, how that should be approached. The two approaches up for consideration with the managed land proxy, which is based on the convention within IPCC national guidelines, where all fluxes on managed land are accounted for and fluxes on unmanaged lands are not. That approach was considered in the draft guidance, but then groups subsequently challenged that and brought to the table an alternative proposal referred to as activity-based accounting, but in reality it's a counterfactual based approach which assumes that forests that are harvested for fiber, for bioenergy, for timber, have to consider a no harvest counterfactual approach, inferring that the harvest results in emissions and that some future regrowth may be considered as anthropogenic, but not the initial tree growth. And that results in a kind of systematic, or certainly in my view, a systematic overestimation of emissions from forestry and forest products. Those two proposals were taken eventually to the Independent Standards Board for a decision. There was a disagreement there within the Independent Standards Board that meant that they couldn't agree on a final approach in the draft of the standard, and so this was left out of the final standard. And as Annette mentioned, there's an intent to publish a request for information later in this year to collect evidence, which hopefully will serve as an unlock to coming to some form of agreement. The second issue, which is possibly, in my opinion, one of the biggest issues, and I know Tristan is going to touch on this a little bit later, so I won't go into too much depth here, is the issue around carbon leakage. So carbon leakage refers to the GHG impacts arising outside a boundary of analysis due to the causal impacts of actions or supply chains on a wider system. And this is not necessarily unique to land use. It can be any kind of industrial activity. So if you have products that impact a market, so it could be energy markets, there's always a risk that either increasing demand or increasing supply can have wider system-wide impacts. So historically, the GHG Protocol hasn't had any kind of positions on leakage, but due to the risk of a biomass increasing demand for land and causing indirect negative consequences such as loss of native vegetation, the Secretariat decided to include land sector leakage as a new reporting category. Now, the decision in the final guidance is land sector leakage is only applicable for biomass that displaces non-food and non-feed uses. So if you use biomass for non-food, non-feed applications, there is an assumption that leakage must apply. And the approach to calculate leakage that was decided upon uses a metric called the carbon opportunity cost, and that effectively just infers loss of native vegetation anytime displacement occurs. While this metric is reported technically outside of the core inventory in something referred to as sort of additional reporting categories, the final guidance does require that when you report the total emissions of biomass supply chains, leakage emissions must be aggregated with your land GHG emissions and wider life cycle GHG emissions when reporting the sort of total aggregate of emissions associated with your biomass supply chain. So even though it's technically outside the inventory for all intents and purposes, it's may as well be reported as part of it, given this need for aggregation. Now, I've sort of believe there's numerous issues with this approach. First, I don't believe carbon opportunity cost estimates leakage. It estimates a counterfactual for land within your value chain rather than attempting to estimate impacts on the wider system. It's only applied when diverting from food and feed markets, when really it should be applied when there are decisions to increase demand for an agricultural or forest commodity. And somewhat ironically, and maybe even perversely, it is food and feed markets that are most responsible for driving demand for agricultural commodities. So it's somewhat bizarre that those markets are let off the hook, and it's only those emerging markets that could displace existing and traditional markets that are going to be responsible for reporting leakage. It's not necessarily additive with inventory emissions and can result in double counting. And ultimately, this approach will necessarily systematically overestimate your indirect emissions by assuming the worst possible outcome. The ultimate result is that any non-food, non-feed use of biomass will be inferred as worse for the climate than fossil fuels. The final issue is around biogenic product emissions. So this refers to the CO2 emissions occurring at the end of life oxidation of biomass. So this might be combustion emissions. It could be theory metabolism or decay. And historically, these emissions have actually had to be reported by companies, but outside the scope of the inventory. So it's like an additional reporting category. And this is somewhat similar to what countries have to do, that in their information items, they have to report the end of life oxidation of biomass for information purposes. The reason they don't include it in the inventory is the emissions are reported within the land sector, inferring that at the point of harvest, the emission occurs. I won't go into the detail of the logic of that, but there is very good reasoning as to why that approach is taken. Now, the approach the land sector removals guidance has taken is these product emissions must be reported for biogenic products, such as biofuels or biochemicals. Now, the guidance is not entirely specific as to what counts as a biogenic product. So if we start thinking about things like textiles, are these sort of sectors or products that have to report their emissions? So that's a bit of a gray area that might require further guidance. But suffice to say, for bioenergy purposes, these end-of-life emissions need to be reported. Now, they could be reported in two different places depending on the information that is available. So if land sector emissions and carbon leakage are reported, biogenic product emissions can be reported in this additional accounting category. So kind of outside the physical inventory, somewhat similar to the process that's in there at the moment. So they're reported there for information. Now, if you can't report land sector emissions, so let's say either you don't want to or you don't have the traceability to report those emissions, or you don't report the leakage, then emissions are reported in the land emission category, effectively inferring deforestation. Now, as an overall kind of concept of reporting, this is, I believe it's kind of reasonable. It's basically saying prove the origin of your biomass to make sure you're not having damaging impacts on land. Otherwise, we're going to penalize you and sort of result in reporting those emissions as I guess real or genuine, not just as information. And this is kind of somewhat similar to the EU ETS, which effectively says make sure you use sustainable biomass. Otherwise, we're going to treat the biomass comparably to fossil fuel. However, there's sort of numerous problems in this approach, and that there's a lack of clarity as to what constitutes a biogenic product, so it's not clear to what sectors this applies and what sectors it doesn't. And there's no justification provided to why certain sectors are exempt, such as food and feed. Also kind of underpinning this is just sort of the general concerns over this need to report leakage. So where companies feel leakage doesn't apply for whatever reason, the mandatory nature of reporting leakage provides this kind of general issue that if you don't feel it applies, you end up in this situation of effectively inferring deforestation for biogenic products. The final, I was going to say the final issue I was going to touch on, but I think those were the 3 key points I wanted to make. There are a couple of other issues, so this isn't totally inclusive of all the potential problems that could materialize from application of this guidance. There are issues around, in particular, mass balance. There are potential issues around removals reporting. I won't cover everything today, but if you did want any further detail, I put up a technical review on my LinkedIn, which can be accessed using that link. And if there's any questions, I'm happy to take them now or indeed later.
Thank you so much, Michael. Let me see. There was one question regarding, I'm going to read it out. Is it acceptable to use a switch to biological CO2 storage instead of geological storage? I'm not entirely sure how to understand that question.
So just switch to. So I'll do my best to answer the question, but if I haven't quite got the intent of it correct, please do provide a bit more detail. So for reporting removals, both biological CO2 storage and geological storage is allowed. So if you store carbon in forests, you are allowed to report that as a removal, provided you adhere to a range of requirements covering things like, so for biogenic products, traceability back to the sourcing area, a requirement that if there are future losses, so future reversals, either due to, I guess, increases in harvesting or natural disturbances, those reversals are subsequently reported. And that's equally true for biological CO2 storage as it is for geological storage. The one slight difference is for biological storage in products. So I think there was a long discussion as to whether the sort of IPCC approach to harvested wood products would be adopted that would effectively allow removal and storage of carbon in biogenic products to be effectively reported as a removal. The final result was that that's not allowed to be reported as a removal, but it can be reported as a separate informational item as carbon storage. So you can report the storage of carbon in wood products, but it effectively doesn't count towards your fluxes of carbon, either the emission or removal.
Thank you. I think that was mainly, yes, here's something else. Interesting. We have 4,000 hectares cultivated with sweet sorghum, which absorbs 50 tons of CO2 per hectare and year, and fix 4 tons of carbon per hectare and year in soil. From sweet sorghum, we produce syrup, sugar, wheat, and bioethanol. Where does carbon leakage occur when we use biomass for energy applications?
So I note those came from 2 separate quotes. So I'll try. I don't think that first one was a necessarily a question rather than some confirmation. But suffice to say, I suppose all the sort of requirements that we've kind of mentioned will apply in that that context for bioethanol, albeit some of those would not apply to the sort of syrup and sugar, provided that's used in sort of food and feed markets. Coming to that second question, where does carbon leakage occur? When we use biomass, say agricultural residues for energy applications. So there is, so if we focus on this distinction between products and residues and wastes, this provides sort of an interesting area of the guidance where certain exemptions could in theory apply if you are using either residues or wastes, which is quite right. If you're using a waste, it's unreasonable to infer that land sector leakage occurs because you're just using something that would otherwise be wasted. Now, for sort of almost the most definitive waste, like municipal solid waste, is sort of a very clear exemptions there. When we start looking at agricultural residues, that is where things become a little bit more complicated, because from memory, I don't think the GHG Protocol adopts it doesn't adopt a similar approach to categorization as, let's say, things like the EU Renewable Energy Directive. So if you're using straw or bagasse, that will be treated as a residue and is often sort of exempt from things like land sector reporting. The GHG Protocol is a lot more stringent there, and I think from memory it's something like if you pay for a form of biomass, then it is effectively considered as a product. So when you're considering things like agricultural residues, bagasse, husks, if there is a market there for that material, then you're in that same kind of position of assuming that carbon leakage occurs, and so whatever the native historical vegetation was there on the lands that you are sourcing from, you're inferring loss of that native vegetation to supply those agricultural residues, if you are, let's say, diverting from feed markets. Just one final point on that, there's still a grey area there as to how do you determine diversion from feed markets, but the risk of reporting leakage does exist there.
Thanks, Michael. I mean, I would just like to highlight a little bit what you mentioned in terms of the impacts. I mean, in the meanwhile, an Excel sheet has been published by the World Resources Institute to calculate this carbon opportunity costs. And if you look at that Excel sheet and you look at applying it to different bioenergy products, for example, ethanol, depending on the geography, you end up with a carbon footprint that is about 3 times as high as the footprint of fossil fuels. So, and that is why we chose the title of this webinar. What this standard actually does is it kind of accounts for formidable CO2 emissions towards the use of bioenergy that, from a carbon accounting perspective, is saving a lot of CO2 emissions. I mean, depending, of course, on the local circumstances, producing ethanol instead of gasoline saves significant amounts of CO2 emissions. And with this peculiar trick of introducing carbon opportunity costs, they simply turn the calculation upside down and say, well, what you're doing is causing huge emissions, theoretical emissions, because, I mean, how would the land that you're using suddenly be converted into natural vegetation within a few years. It simply wouldn't happen. So that's just a short comment from my side, but I would like to turn it over now to Tristan, who has also been looking at this topic more deeply and is also kind of looking at alternatives on dealing with the what is called indirect land use change. Please, the floor is yours, Tristan.
Great, thank you very much, Christian. Can everyone see my screen okay?
Yes.
Excellent, great. And my audio just did something very strange, but sounds like it's coming through just fine. Hi, everybody. Yeah, so my name's Tristan Brown. I'm Vice President of Molecule Group. If you're not familiar with Molecule Group, we are relatively new. Only been around for about a year and a half. We are an international convening firm that organizes to develop, I would really say, cross-industry and especially transnational consensus on different topics. And so through Molecule Group, I am specifically working on leading what's referred to as the Induced Land Use Change Reconsidered project, which, as the name suggests, is really focused on developing a consensus across different biofuels groups, across different energy groups, and especially across countries. Really, we have broad participation from 3 different continents at this point on how we should account for induced land use change emissions. So my background is in bioenergy and the bioeconomy. I have a PhD in biorenewable resources and technology, also a lawyer. And so I'll point out the caveat. I am not an expert on the greenhouse gas protocol. Know a decent amount about it, but what I'm really an expert on is land use change. And so I'm going to be looking at this, really the land sector and removal standard from the perspective of how the world has handled greenhouse gas emissions in the past, especially through land use change, and how that's going to be changing now that this new standard is out. Let me move forward with my screen. Perfect. So you've heard a lot about this already, so I'll go over this pretty quickly, but the new standard came out back in January, so still very new, quite a bit delayed. And it really tackles what, in the standard nomenclature, we refer to as both direct land use change, or DLUC, and indirect land use change, which is referred to as ILUC. And then both of those fall into this broader induced land use change category when we talk about land use change. Now, the standard does use different nomenclature, and so that's a little bit confusing. But when we think about those 2 big types of land use change, direct land use change is reported in inventory, and what they refer to as land carbon leakage, what we normally would refer to as indirect land use change, is reported out of inventory. But there is an important caveat there. That's true unless you're also reporting your aggregated or your net land/land management emissions, in which case all land emissions are accounted for in the standard way when we think about this in inventory. So it gets pretty complicated depending on how you handle this, how you look at those 2 different types of emissions, and in terms of how that's going to contribute to your inventory. But what I think is really important, because this is radically different from how land use change has been accounted for in the past under government programs in particular, whether we're looking at the European Union RED, whether we're talking California's low carbon fuel standard, is this directly affects the use of all feedstocks that are produced on cropland. So historically, we have generally just considered land use change in the context of a bioenergy feedstock. And the rationale behind that was, if we're producing bioenergy in order to reduce our greenhouse gas emissions, then we need to take into account the full life cycle of those greenhouse gas emissions. Because the protocol, though, is much broader than just an energy program, it's much broader than just, say, a low carbon fuel standard, this now encompasses everything. Right. So if you are producing anything on cropland, this could be for biofuel feedstock, this could be for textile production, this could be for any number of different things. And I've included the table directly from the standard here showing what they're listing, right? If you're a company that owns or controls significant areas of land, you are covered by this. So this is now very, very broad. And a very large number of companies, of reporting entities that have never probably even heard of the phrase indirect land use change or anything like that before, are now going to be covered by that, especially because this also encompasses that supply chain. So See our third bar on the list here, companies that supply significant amounts of products to agricultural producers. So if you are in that general, what I will call ecosystem, if you're part of the agricultural supply chain, even if you don't own land, even if you are not directly producing something on cropland, you are now covered by this. So this is going to introduce a very, very large number of participants to land use change that haven't really had to consider it in the past. Now, when we talk about the two main types of land use change, right, the direct and the indirect, in theory, all land use change is direct, DLUC, right? And the reason for that is because whenever you're having to, convert land, there's going to be an entity, an actor that is going to be making that direct land use conversion. And so, when we talk about these two different types, it gets a little confusing, right? Because ultimately all indirect land use change is direct land use change in one geography, right? There's always some place where it's taking place, but it's complicated because direct land use change is something that we can observe. When it's because we can observe it, we can quantify it. We can say exactly how much land use change is occurring. We can say how much carbon is being lost or gained when that land use change occurs. And so that's something that's very different from indirect land use change, which by definition cannot be observed. So what the protocol is doing, and in this regard, I think it's moving a step in the right direction, is categorizing direct land use change as separate from indirect land use change. And in doing that, it's trying to incentivize participants in the marketplace to understand where their feedstock is coming from. And it does this by adopting this table here, where as you look at the land use change, the direct land use change that occurs from producing a particular feedstock or a particular good, you're trying to get as much granular data as you can about what land use change is occurring, right? And so you've really got these 5 different categories going all the way from the global, which is about as ambiguous as you can get, right? This is going to be a very, very broad average, all the way down to a specific harvested area where you are observing that land use change has occurred on a particular plot of land. You know exactly what type of vegetation was on that land beforehand, you know where any carbon was lost or gained because of that. And it's really trying to encourage participants in the protocol to get more granular data, to develop more granular data so that they can get very specific data about what land use change is occurring and how that's impacting their inventories. And the general approach that we see is that, right, as you look at your supply chain, if you don't have good data, you're going to use very conservative assumptions, right? That global, or we could say a countrywide jurisdictional basis. And so it's trying to push companies, reporting entities, to understanding where they're getting their feedstock from and what type of land that's occurred on. And the general practice, right, when we look at it, is that as you get more granular data, you're going to get more precise data, you're going to get more accurate data. And so if you're reporting lower emissions resulting from that compared to if you're using less granular data, that's the incentive, right? If you don't have a good understanding of where your feedstock is coming from, then you need to make a conservative assumption, which is necessarily going to generate higher emissions. Trying to encourage and incentivize participants to better understand where those feedstocks are coming from so that they can benefit from lower emissions because they're reporting on a more granular and therefore a more accurate basis. And so from this perspective, this is something that a lot of jurisdictions and when we think about government programs, they've been trying to move towards. It hasn't really been feasible until the last several years, simply because we didn't have good data. It was a matter of actually having to send someone out to, actually check individual plots of land. It was very, very resource intensive, very, very time intensive. But especially with changes in computational approaches, and even more than that, especially with just the sheer number of monitoring satellites that we have, that are constantly passing over land, that are able to show what change is occurring on the land. And then very recently, drones. Drones have really radically changed this, right? When you start thinking about LiDAR-equipped drones, other types of monitoring equipment that can now be on drones, constantly passing over land. So this is something that we've started to see become feasible that wasn't necessarily feasible even 10 years ago, even in theory 5 years ago. And I think the protocol, the new standard, is trying to adopt a lot of these technologies indirectly by encouraging companies to move more towards granularity in this approach. One of the challenges, though, is you have to understand what your basis is, right? So if you're going to say, well, land use change has occurred, you need a baseline. And you also need to understand how much time has passed, especially when we think about the time period that you are assessing. And this is where things get really tricky, right? Because in order to have a baseline, the Greenhouse Gas Protocol, by definition, is global, right? In that it is applying to entities around the world. And you take the example of the US and Brazil, for example, where you're going to have direct land use change that is still continuing to occur. Cropland in the US, especially in the Midwest, has been farmed for decades and in some cases even centuries. The land use change that occurred was in the very distant past. Whereas in Brazil, especially in the areas that are a cause of concern these days, it's much more recent. And so you're necessarily comparing apples and oranges and trying to put assessment periods together, trying to understand what that baseline is when you observe direct land use change occurred is going to be a challenge. And so differential treatment by when that timing occurs is something that the protocol does try to directly account for, but this is going to be a major challenge as this is being implemented because of those differences depending on one country from another. The second type of land use change we talked about was indirect land use change. And this is, I think, where things become very problematic, largely because, and I'm trying to remember which speaker exactly it was before, but said, go into first principles, basically, what the protocol is doing with the standard here for indirect land use change is essentially getting rid of all the work that's been done over the last 20 years on modeling land use change, indirect land use change in particular, and replacing it with a very rudimentary system. And so the standard is changing things. First, instead of referring to indirect land use change, you'll never actually see indirect land use change referred to in the standard. It adopts something called land carbon leakage. But fundamentally, they're the same thing. And I've highlighted the really important parts here. This is taken directly from the standard. Companies shall quantify, we're going to call it indirect land use change, they're calling it land carbon leakage, using the annualized average carbon stock losses from the conversion of native ecosystems to agricultural land to replace the quantity and type of reduced or diverted food or feed production. And they refer to this as the carbon opportunity cost. Couple of major differences here, just in this little section alone, with how indirect land use change has been accounted for by companies, by participants in the marketplace in the past. The first, you will note that every calorie is treated the same, right? Diverted, reduced or diverted food or feed production. Food and feed are not the same thing, right? The caloric efficiency of food compared to feed is drastically different. And I give the example I always give students. I'm also a professor, and the example I give students in class, right, is cattle. When we feed cattle, and we're typically feeding cattle dent corn here in the United States. Dent corn can also be used to produce ethanol. So it's not really a food versus fuel debate. It's more of a feed versus fuel debate. When you feed dent corn to cattle, humans ultimately end up getting about 10% at best of the calories that are fed to those cattle. Right, 90% of that is lost, generally in the form of methane or other types of emissions. And so when you say diverted food or feed production, if you're growing kale, right, on cropland, and you get rid of that cropland and start producing a biofuel feedstock instead, right, that kale, you're going to get most of those calories. But when you start talking about livestock feed, you are going to lose the vast majority of those calories. The protocol standard does not differentiate between those. Right, so food or feed production, it's basically a 1-to-1 ratio here. And so this is very, very rudimentary. It essentially discards everything that we know about caloric efficiency, caloric inefficiency when you look at that. And the other aspect of this is, as I mentioned earlier, this is no longer just producing biofuel feedstocks. This is going to be any approach to the land, any change to cropland. You're going to assume is going to necessarily result in the conversion of native ecosystems somewhere else. And so this could be something where, I give the example of if you're a farm and you decide to adopt organic farming practices, you are necessarily going to lose yield, right? Your yield is going to go down. You're going to stop using pesticides, which means you're going to have more pest invasions. Your fertilizer is not going to work as well because you're not going to be using synthetic fertilizers. Your yields are going to go down. Well, this is something now, right? Reduced food production. Because you are reducing your food production, you are going to have to report carbon leakage, land carbon leakage. And so even though you may be using less synthetic fertilizer, you may be adopting, say, no-till practices on your cropland, you're assuming that your carbon intensity of the food that you're producing is going down. Well, under the protocol, you now have to attribute higher emissions associated with that. And as I'll show in a minute, these are very high emissions indeed. So this concept of the carbon opportunity cost applies to everything. And again, this is taken directly from the standard carbon opportunity cost estimates leakage by assuming one-to-one replacement of displaced food via conversion of native ecosystems to agriculture, and as such is relevant information to report. Now, indirect land use change, nothing really new, right? This is something that's been around since at least 2008, which is when I first got involved in the field. It's evolved since then, but this is not a new concept. And while there's a lot of debate over what the specific carbon intensity that is generated by indirect land use change is, you know, it's largely coalesced, right? Around different programs, we have a general feel for what it looks like from one feedstock to the next. Well, this new concept of the carbon opportunity cost throws all that out the window, to put it bluntly. So here I am just showing 3 different programs, a couple different values that have been reported. So CARB, that's the California Air Resources Board. This is California's low carbon fuel standard, which was one of the early jurisdictional programs to really say explicitly you need to model indirect land use change and apply an indirect land use change penalty to different feedstocks for biofuels. European Commission around the same time came out with a report. And I've compared both of those to what is in this, what Christian was talking about, right? This new workbook that the WRI, has put out. And as you can see, these numbers are drastically different, right? You know, it varies from one feedstock to the next, but there's certainly a couple that are going to be out there. And just to put this in context, so these are all shown in grams of CO2 equivalent per megajoule. A fossil fuel that a biofuel is going to replace is about 100. You know, number varies a little bit, but it's about 100 grams of CO2 equivalent per megajoule. So what you're seeing here, every single one of those blue columns for the most part, with the exception of pork lard biodiesel, is saying the carbon opportunity cost penalty for biofuel feedstock production is uniformly higher than the life cycle carbon intensity of gasoline or diesel fuel that is replacing. So this is not showing the carbon intensity from combusting the fuel right from the full life cycle, anything like that. This is just this concept of a carbon opportunity cost, right? And you notice soybean oil. So if you're producing biodiesel from soybean oil, now this under the WRI approach, you're actually showing that the life cycle impacts, the carbon intensity is 2 to 3 times higher. In some cases, you get some very, very bizarre numbers. And so I'll give you the example. Take beef tallow biodiesel. This is where you're taking essentially residues from the processing of beef. In the US, in the European Union, the general approach has been, well, this is a waste product. And so this doesn't have a carbon intensity. Certainly it is not contributing to indirect land use change. But under the WRI approach and now under the standard, we're actually seeing that the carbon opportunity cost from beef tallow is about 6 times higher than the entire life cycle fossil fuel emissions of diesel fuel that you would be replacing. So uniformly, these are very, very high carbon intensity numbers attributed to carbon opportunity cost. And there's a couple of reasons for this. One is waste is no longer considered waste if it's valorized, right? If you are getting paid for it, if it's not something where you're receiving a tipping fee, the general approach under the protocol is, well, that is a feedstock like anything else. So this is a major challenge, right? Because this essentially eliminates most of what we would consider waste-based feedstocks. You'll notice cereal straw over there, right? Overall average, the cereal straw carbon intensity cost, because it can incentivize the production of food crops and therefore land use change. The cereal straw carbon intensity or carbon opportunity cost is almost as high as the entire life cycle carbon intensity of gasoline, right? So there are very, very, very few biofuels that would be considered competitive on a life cycle basis with fossil fuels under this new approach. And so it's going to take some time for this to work out. This particular spreadsheet, I believe, was just released March 6th. So, still a lot that needs to be considered, a lot that needs to be dug into with this, but these are going to have major impacts. And as we think about, this overarching question of, is the new standard, is this going to help or hinder decarbonization? This, for many companies, is going to completely eliminate biofuels use. So this is going to be something we're going to be working through for some time to come, I believe. And so with that, I'll just make a final note about the Induced Land Use Change Reconsidered project. So Molecule Group, we are starting to really tackle the standard here. We started the work stream late last year before the standard was out, when nobody really knew what to expect with the standard that wasn't involved in it. We have been pivoting, and we're going to be tackling the standard much more closely, especially because we are working closely with the IEA on the implementation of the BLEM 4X Sustainable Fuels Target, which came out of COP30 last November. The big question for the implementation of that target that the IEA is going to be working on is, are the sustainable fuels actually sustainable? And so the release of the standard, I think, is going to have a noticeable change on that debate. We're now going to have different ways of looking at whether something is going to be sustainable. And we're continuing to recruit sponsors and participants in this. So if you have any interest in that, certainly just want to make a note, please feel free to reach out to me. And so just to wrap it up then, the new standard is explicitly incorporating both direct and indirect land use change penalties into corporate accounting. So this is now going to be a much broader approach than's been used in the past, certainly not just for biofuels feedstocks either. The direct land use change calculation defaults to low granularity, presumably higher emissions, unless a reporting company has detailed land data. So it's trying to incentivize and encourage participants in the standard to figure out where their feedstocks are coming from and figure out what type of land use change is occurring there, get detailed granular data, really taking advantage of increases in monitoring capabilities. The indirect land use change calculation requires reporting on this carbon opportunity cost basis. And this, I would say, is a clear regression from the existing indirect land use change modeling that we've seen over the last 20 years. If you dig into the worksheet, it uses very old, in some cases all the way back to 2003, low granularity data sets for the above and below ground carbon storage values. It also assumes a one-to-one relationship between reduced food supply and increased land clearance. And I think the final big issue that we run into is, from this perspective, all indirect land use change, or all land use change really, is negative. There's many examples that we have seen in the academic and the scientific literature where, for example, in the Central Plains and North Plains of the United States, land use change can actually increase soil organic carbon levels, completely ignored by this. And so it's really assuming the worst case scenario across the board when it comes to reporting land use change, and particularly the carbon opportunity cost values. So with that, happy to open up for questions.
Thank you so much, Tristan. I can see no...
I appear to have lost my audio. Just 1 second. All right, there we go.
Okay. Right now there are no questions. There are just some shocked statements here from participants who are asking, how is that possible? How would an organization that kind of claims to protect the climate by bringing out standards come with a standard that is actually kind of trying to prevent climate protection from happening? That is the question that is in the room, and that is the question that is haunting myself, because I really don't get what the purpose of doing that is. What is the benefit of forcing an airline that is using sustainable aviation fuel from reporting higher CO2 emissions? I really don't get it, but maybe there is some hypothesis among the panel members that can comment that.
I'm happy
Michael.
to take a stab at that, because this is something that we've certainly seen in the U.S. So there's something here that we refer to as the precautionary principle, and I don't think that's unique to the United States, but that's the terminology that we use here to describe it. And it essentially is the idea that if there is a risk of something happening, of a negative action happening or a negative consequence occurring, even if it is a very, very small risk, we need to do everything possible to make sure that risk, that consequence doesn't happen, right? And so when we think about greenhouse gas emissions and the idea that we only get one shot at decarbonization, right? And, you know, as soon as we pass a certain threshold, there's no going back, then we need to be as stringent as we possibly can. And so, you know, I'll give the example of Germany, not our greenhouse gas emissions, but where the precautionary principle held true was, right, even a small, very, very small risk of a nuclear meltdown, and the country got rid of all of its nuclear power plants. That's essentially kind of what we're seeing here, is even if there's a low risk that the greenhouse gas emissions from biofuels are higher than being calculated, being modeled, we need to make sure that that does not happen. And so the precautionary principle, and it's closely tied with the electrify everything movement, which is that it's not enough to get rid of fossil fuels. We need to eliminate combustion across the board. I think we're seeing those both very tightly intertwined here. And I suspect, based on a number of the participants I know who are involved in this effort in particular, this has a lot of their fingerprints on it. I think that's what we're seeing here. But certainly love to hear from the panelists, different perspective.
Thanks, Tristan.
Yeah,
Mike?
I mean, I think Tristan's observations are all pretty fair. And I think one of the things I noticed throughout the development process is that everything started off really on technical arguments, and as time went on, it very clearly moved more towards like internal politics, and you can kind of see that filter through into the final standard, that it's sort of the way that it's framed is very sort of protectionist, effectively, of food and feed. So there's clearly an underpinning sort of political positioning of agricultural commodities should be used for food and feed, or we are going to penalize you as a company for emissions. So obviously, from a technical basis, if you are combusting CO2 from an agricultural commodity or metabolizing it, the atmosphere sees no difference. And so from a technical basis, there should be no differentiation in how you approach that. But from sort of taking that sort of more political lens of, we're trying to achieve a specific outcome here, and that is to try to avoid any situation where any emerging market can divert from food and feed. So we are just going to design a somewhat flawed, technically flawed methodology that will effectively serve that outcome. So I kind of think the sort of that sort of introduction of more political positioning, certainly later on in the process, has affected this outcome, and it's almost bordering serving as some form of, like, almost, rather than a technically accurate reporting methodology, it's more serving as sort of some kind of sort of policy to try to stop emerging markets encroach on traditional ones.
There is a question in the chat. What action is industry taking to kind of raise concerns over the perverse incentives that are being created by this standard? And I think that's a justified question. And one answer is we're trying to raise awareness, because nobody has seemingly even taken notice of this, the implications of this standard, and that is why we are doing this webinar here. So this is one contribution we try to make. We need to make people aware of what is going on. Now, there is one hope, and maybe Annette, you can briefly comment on that. And that is, this is not the end of the story, because there is right now a negotiation between the ISO organization and the Greenhouse Gas Protocol on harmonizing their standards. And I my hope is that the ISO organization will not let flawed science get its way. Annette, would you support that view or that hope?
Well, certainly that's what I'm hoping. The GHGP's decision-making and development and comment resolution is quite a different process from the ISO process. In the ISO process, we have rounds of drafts, and each time there's a new draft, all the members of the working group have the opportunity to put in comments, and then the comments are resolved together in working group. And finally, the documents go through a series of voting, and they have to receive a 2/3 majority vote in order to pass and become an international standard. But I suppose that should give the opportunity to make sure that technical flaws are ironed out. But it comes back to, I guess, how Tristan described it, an application of the precautionary principle. To some extent, it depends on who's in the room and who has the loudest voice and who is most persuasive. And if, you know, the current text of the land sector and removal standard is probably largely driven by people who have these major concerns about food versus fuel debates or potential for negative biodiversity outcomes from expansion of bioenergy. And, you know, you mentioned also, Christian, that maybe there are some examples out there that aren't sustainable. And so certain, I guess, media outlets have been promoting some really bad examples, and so the public and many experts that aren't precisely experts in this field that we're discussing have seen this type of evidence. And so I would hope that the ISO process would give the opportunity for everybody to dig in deeply and to raise all the concerns that we've just discussed this evening, or my time. Yeah, it certainly requires us all to keep paying attention and keep discussing the issues, so that, yeah, I guess things don't inadvertently get passed because we've all got worn out or something from saying the same thing, like a broken record, which I guess I tend to feel like this debate on indirect land use change has been going since, you know, the early 2000s, and we seem to be going in circles and saying the same thing each time. But yep, it's not going away, unfortunately. Be really good to publicize the comparison that you showed, Tristan, to get that out there in front of the people that are seeing the alternative points of view being published.
Yeah, agreed. I don't think very many people have seen anything remotely close to that. And, you know, the data's there, right? The spreadsheets, it's highly detailed. They put in a tremendous amount of time into it. But at the same time, it is incredibly rudimentary compared to the analysis that was done even 10 plus years ago in Europe and the United States.
And clearly it has incredibly large implications for the developing SAF industry, for example, that presumably most people in that space are entirely unaware of, because clearly it's incompatible with the objectives of many governments at the moment if companies were required to report that they actually had higher emissions from using SAF than using equivalent fossil fuels.
Yeah, I think SAF, and another aspect of this that has not been considered at all is as we start thinking about carbon negative. So, you know, even something as basic as afforestation, reforestation, right? This is something that the UN, that various countries have been talking about for, you know, decades now as a way to reverse legacy greenhouse gas emissions. But if you are reforesting cropland, you now have to take those penalties that we were just showing and apply that, right? And so in that regard, you're actually saying that reforestation could be worse than fossil greenhouse gas emissions. That's going to have massive impacts, because when we look at how close we are, right, to, you know, basically whether it's 450 ppm or whatever metric it is, whatever threshold you want to use, right, we are a couple of years away at best from passing into that territory. And so at that point, then, even if we were, you know, zero emissions across the board, we're still going to have to reverse those legacy emissions. Well, the nature-driven ways of doing that have potentially just been eliminated, at least according to the protocol.
Yes, exactly. It's totally contrary to the desire to increase sustainability of our land use systems by integrating trees into our agricultural systems, by building soil organic matter, where the regenerative agriculture type concepts, which, as you pointed out, would often have lower yields but be more sustainable in the longer term and have, you know, better outcomes for biodiversity and other ecosystem functions. This particular way of doing the greenhouse gas accounting is really going to provide a disincentive for those type of approaches, which I find very disappointing and strange, really.
I think we need to slowly come to an end, and I would like to raise two questions in the chat that probably are worthwhile to discuss. One says, does the protocol have a legal basis? And the other is related. How does the standard relate to Article 6 mechanism? So what is the legal implication of the standard, or what could be the legal implication of the standard?
Well, in Australia, for example, our reporting for companies now has a requirement to use this reporting. So besides their financial reporting, publicly listed companies now have to report according to the Greenhouse Gas Protocol when they put out their statements each year. So it's not the document itself that has the legal status, it's the fact that there's legislation in Australia that has required companies to use this particular the standard as the basis for the quantification. And other jurisdictions have taken different approaches. So I guess it's different around the world, but certainly it's legally required in Australia.
And with respect to Article 6, Tristan? Sorry?
Well, I was just going to say we're in a weird bifurcated situation here, because as Annette mentioned, there's a number of countries that legally require this, but at the same time, you know, Greenhouse Gas Protocol is supposed to be a voluntary standard, right? And so it ties into Article 6 from that concept, but it's supposed to be a voluntary program. And, you know, if you're familiar with the old debate between SBTI and the protocol, right, we generally seen more companies go towards the protocol because of the way that it addressed these issues. At least before January, SBTI was considered much stricter and not necessarily on base. I'm hearing, you know, the big question I get nowadays when we're talking about this is, could this be the end of the protocol, right? Are companies going to continue to follow this, especially because there is no requirement under Article 6, right? Article 6 is simply, you know, there's voluntary mechanisms, but it doesn't have to be the protocol. So we're in a weird situation where you're going to have countries like Australia that have legally, you know, required it. You're going to have other countries, major emitters like the United States, saying, well, what's the point? Why even participate in this? Because essentially the standards that we have followed in the past, that companies have been using for a couple decades at this point to show decarbonization, are now showing drastically opposite. Why stick to this voluntary protocol if we don't have to?
Maybe just from my end to follow up on the relationship between the standard and Article 6. There's a very sort of distant relationships between them. This standard is very much for how corporates should report their inventory. Article 6 is very much around carbon markets, historically between countries, but kind of recognize that 6.4 does bring in the opportunity to trade credit and link corporate activity and national activity. So somewhere down the line, there in theory should be some form of connection and some degree of interoperability, but there's almost a piece before that the GHG protocol needs to solve, which is trying to do at the moment, which is how does your inventory operate alongside activity within the carbon market that works off totally different accounting principles. So it's intervention type accounting principles rather than inventory type accounting principles. And the land sector guidance, they kind of, there's bits and pieces in there that they kind of start touching on what you should do as a company that buys or sell carbon credits, but there's actually been a recent publication that offers a lot more detail, which is the actions and market instruments. So at the moment, the GHG protocol has effectively like a white paper out, and got an RFI out on actions and market instruments, which is trying to restructure how corporates think about the multitude of different carbon accounting issues that affect a business, including participation in carbon market, including inventory reporting, including how to evaluate wider system-wide impacts. So that's, again, something worth sort of looking at for those interested in sort of the corporate carbon accounting space. In theory, the AMI has that potential. The AMI work has the potential to unlock some of these issues and provide better homes for this reporting information. So, for instance, this idea of leakage sitting alongside the inventory, there's a much better place to sit it in a broader corporate GHG report than trying to conflate it with sort of inventory emissions, which is kind of the risk at the moment. So, yeah.
Kristen, maybe we could just answer one last question that's there in the chat about the relative effect on land-based fuels versus those based on residues or wastes. Certainly the land issues associated with the carbon opportunity cost are not going to be a problem if it's not actually a biomass source that comes directly from the land, but there is still this requirement to report the biogenic product emissions if it's not a product that you eat. So if it's a biomass-based residue, one will still need to report these high emissions associated with the consumption, as in combustion of the product, which will be problematic and I think definitely confusing to users.
Yeah, and I think the other issue is it's really blurring the line between what's waste and what's not waste. So I just returned. I was in Denmark for a week touring anaerobic digesters out there, right? Denmark's 40% renewable natural gas now has been incredibly successful in terms of scaling up its anaerobic digesters. And they're using a lot of what we would normally consider to be waste feedstocks, but increasingly they're having to pay for them because there's so much competition for these waste feedstocks. And so as soon as you start paying for it, that line gets really, really blurred. And they're starting to use a lot of residue straw, right, is a major component of that. Well, that straw, if they're paying for it, that's not necessarily right at that point. It's a purpose-grown feedstock. And this is, I think, really important for us to consider because, as long as I've been in the field, close to 20 years now, every single waste-based feedstock, right, whether it was used cooking oil or animal tallow or anything else that you had to pay a tipping fee to get rid of, suddenly companies were starting to lock it up because it became very valuable, right? And they were starting to sell it. And so everything that's truly waste-derived, once it gets commercialized and scaled up, it has a tendency to no longer, right? It has a tendency to become valorized, and that's been the entire focus. Well, now, once you valorize it, it's no longer waste-based in terms of how we report those emissions. And it comes back to the animal tallow, right? On the slide that I showed, 600 grams of CO2 equivalent per megajoule. This is something that has always been considered one of the best waste-based feedstocks. And so, in theory, we could start seeing something similar for MSW or even sewage. If you start paying for it, it's no longer waste derived for accounting purposes.
Yes, I think we need to wrap up. I mean, what you're saying, Tristan, is, and what also has been mentioned by the other speakers, is that there are some aspects here that are really concerning. There is a hope that these aspects will not kind of be the final word on carbon accounting. There will be a phase where the joint standards that should be published by ISO and Greenhouse Gas Protocol will also be disclosed and also kind of open for public comment. So I think it's worthwhile that we keep a close eye on how this is progressing and to also speak up that absolutely make no sense. So thank you all for staying with us. Thanks a lot to our presenters. Thanks, Annette, Michael, and Tristan. And I look forward to meeting you at another occasion.
Likewise. Thanks, all.
Goodbye.
Sure.